senior personnel at PU Prime Africa, and I want to welcome you to PU Prime's Trading Academy, where you have ample opportunity to learn and gain knowledge from the global financial market. This program gives you access to educational materials such as videos, PDFs, audiobooks, and etc. These have been put together by expert traders and experienced financial analysts at PU Prime Africa. So, congratulations, as you are now part of the winning team who have mastered the tricks and the strategies of how to be profitable in the global financial market. We are showing you that you also can learn the art of profitable trading. So, sit back and enjoy all the courses.
Hey, hi everyone. My name is Michael Akirata. I'm the head trainer for PO Prime, and I'm here to tell you about the tradable financial instrument, like what are tradable in the global market. And at this session, I would like you to listen, and because we are going deeper into the classes. Okay, so this module we are going to talk about the currencies. We are going to talk about what is traded, what are traded in the global financial market, most popularly traded instruments. We talked about instruments being examples of instruments like currencies, stocks, indices, commodities, etc. So we're going to talk about the most popular one, the few popular ones that are being traded in the global financial market. So right on with me as we get started. Okay, so now the first thing is what are traded in the market. So we can see flags, these are symbols of countries and all that. So this is just to prepare your mind that these are the things that are traded in the market. These are the instruments that are traded in the global financial market. So let's get started. So the first one is currencies. As you can see here, that a currency is the most specific sense is money. Okay, so in any form, when you use or is circulation as a medium of exchange, especially circulating banknotes and coins. So we can say that currency is also the same as money. So money are being traded in the global financial market. Now let's look at the most traded currencies by value. So we can see here that United States dollar is the most traded currency by value, which is what, 87.6%. As you can see, so which means that of all the currencies in the world, United States dollar has the highest or is the most traded currency. Then after that, we have euro. After euro, which is 31.3%, we have Japanese yen, which is 21.6%. We have British pound, which is 12.8. We have Australian dollars, which is 6.9. We have Canadian dollars, which is 5.1. We have Switzerland franc, which is 4.8. Chinese yuan, which is 4.0. Mexican pesos, 2.2%, down to South African rand, which is 1.0%. So these are some of the percentages of currencies traded by volume in the world. And we also have, out of these currencies, we have 8 major currencies in the world. So these are them. We have the 8 major currencies in the world. We are still going to review them later in this class. Okay, so the next traded instrument is stocks. So if we're talking about stocks, we don't know what stock is. So this is an example of stocks. Like I say, a stock is also known as equity, is a security that represents the ownership of a fraction of a corporation or an organization. This entitles the owner of the stock to a proportion of the corporation assets and profit equal to how much stock they own. Unit stock are called shares. So what do they mean here? We are saying that when you buy shares in a particular country, so or in a particular company in a country, so companies, multinational companies like McDonald's, like Cisco, Google, Facebook, Intel, Caterpillar, United Technologies, etc. It means you are buying part of ownership in that company. So in Nigeria, it is very common, we call it shares. So that is that. So you can also trade stocks on our platform. Okay, so after the stocks, talk about commodities. As we all know that a commodity is an economic good, usually a resource that has full substantial fungibility, that is market treats instances of the good as equivalent or nearly so, with no regard to who produced them. So what does this mean? We're talking about commodity to be a resource, something like a mineral resource or a natural resources. So these are substantial fungible. So what it's saying is that it is something that can be traded, that can be exported, imported, and all that. Right here we have a pie chart showing us the percentages of popular commodities that we have. So it is subdivided into three. We have the metals, we have the energy, we have the agriculture. So the metals is 35%, the energy is 31%, and the agriculture is what? 34%. So under the energy, we have the natural gas, we have the WTI crude oil, Brent crude, heating oil, unleaded gas. So these are part of what? Energy. So if you are trading crude oil, they are part of what? Commodity. Okay, so they are part of commodity. So metals, we have gold, we have silver, we have copper, aluminum, zinc, nickel. So these are examples of what? Metals. And the third one, which is agriculture, we have corn, soya beans, coffee, sugar, etc. So these are examples of what? Agricultural commodities. So because we can exchange them, we can export, we can import them, so they are part of the what? Global financial market. So they are financial instrument that can be what? Traded. And don't forget that if you are trading it, we are also, well, the reason why we are trading is the price, okay, is the price of all these instruments. So the next one is indices. When we are talking about indices, the indices track value, the indices track the underlying prices of the currency pairs within that index. So if the individual forex prices in that index increases, then the value of the index will go up. So if the individual forex prices decreases, then the value of that index will fall. So naturally, what we are saying is indices is we attach some kind of prices of companies, shares of companies together, attaches to a particular price. So when you're attaching the index, so you're attaching price of commodities to a particular price. So it is what? Indices. So example of them are US 30, HKG 33, JPN 225, your NASDAQ, US 30, your US 100, UK 100, DAX 40, etc. They're example of what? Indices. Okay, so the next one is what? Cryptocurrency. So a cryptocurrency is a digital currency designed to work as a medium of exchange through a computer network. So that is not reliant on any central authority such as government or bank to uphold or maintain it. So what we are saying is, like we all know, cryptocurrency, they are encrypted currency, which is decentralized. So it means that nobody is controlling it. You have a charge of your own, and they are traded in the global financial market because they also follow the law of what? Supply and demand. Okay, so that is that the instruments that are traded in the global financial market. Now, let's talk about trading that done in pairs. So when we talk about trading done in pairs, it means that trading involves two different instruments of the same, of different value. So it could be two different currency, it could be a currency pair and a commodity. So it just involves exchange of two different instruments. Okay, so that is that. So before that, we need to talk about major currencies once again. So when we are talking about major currencies, we have 8 major currencies in the world. So these major currencies, they are currencies of countries that have been tested and they have been proven to have economic stability for over 100 of years. Okay, so the first symbol is US dollar. So the USD, United States dollar, the country that spends it in this tabular, we tabulated it. So the country that spends it is United States, and the name of the currency is dollar, and the nickname is buck. So euro, we have euro to be Eurozone members, that's countries within Europe. Then euro, that's a currency. Then the name of the nickname is called fiber. Then we have Japanese yen, which is Japan. Then the name of the currency is yen. Then the nickname is also yen. Then GBP as a symbol, Great Britain as a country that spends GBP. Then pounds is the name of the currency, so which is called GBP, means Great British Pounds. Okay, then the nickname is what? Cable. Then we have CHF, which is Switzerland franc. Then the nickname is what? Swissy. We have CAD, Canadian dollar, which the nickname is what? Loonie. Then we have AUD, which is Australian dollar, with the nickname is what? Aussie. Then we have NZD, which is New Zealand dollar, while the nickname is what? Kiwi. Okay, so these are major currency pairs that we have. Okay, so now let's talk about the categories of currency pairs. So what are the categories of currency pairs that we have? So we have three major categories of currency pairs. We have three major categories of currency pairs. So we're going to visit them one after the other. But the first one that we are seeing here, we have the major currency pair, we have the cross currency pairs, and we have the exotic currency pairs. So we have the major, we have the cross, and we have the what? Exotic currency pairs. Okay, now let's talk about the major currency pairs. The major currency pairs is the pairing of any of the major currencies with US dollar. So what does it mean? You know, when we talked about major currency earlier, we talked about the euro, we talked about Japanese yen, we talked about GBP pounds and all that. So when you are pairing any of these major with US dollar, it becomes a major currency pair. Then the majors are the most liquid in the world. Yes, they are the most liquid currency in the world. So liquidity is used to describe the level of activities in the financial market. So let's talk about Euro USD, the pairs, the major currency pairs. The first one is what EU, which is Euro USD. Euro USD, the country that spends it is what? Eurozone, and it's the United States. Then you call it Euro dollar. Then after that, we have USD JPY, which is the United States Japanese yen, which is called dollar yen. We have GBP USD, which is pound dollar. We have USD CHF, we have USD CAD, AUD USD, and NZD USD. So when you have any of the major currency pairs paired with United States dollar, it is called major currency pair. So any of the major currency that is being paired with United States dollar is called the major currency pairs. Okay, let's go to the next one. So the next one is called the cross currency pairs. So the next one is called the cross currency pairs. And the cross currency pairs, these are pairs that they don't contain what? The US dollar, but they are known as crosses. So once you cross any major currency without US dollar, they are called cross currency pairs. Okay, so once you pair any major currency without US dollar, they are called cross currency pair. So while not as frequently traded as the majors, the crosses are still pretty liquid and still provide plenty of the opportunities. So the most actively traded currencies are derived from the three major non-USD crosses. So the euro, the JPY, and the GBP. So what are they saying? It's saying that out of the, if we have 8 major currency pairs, but if we remove USD, it becomes 7. So out of the 7, we have 3 popular ones. Okay, so it could be euro crosses, it could be JPY crosses, or it could be GBP crosses. So examples of them, we have euro crosses, we have euro CHF, which euro is a major currency, and CHF is another what? Major currency. We have euro GBP, which is euro, a major currency, GBP, another major currency. So we have euro CAD, euro AUD, euro NZD, euro SEK, euro NEK. So these are examples of what? Major currency pairs. These are for JPY. We have euro JPY, GBP JPY, CHF JPY, AUD JPY, NZD JPY. Okay, then GBP crosses, we have GBP CHF, GBP AUD, GBP CAD, GBP NZD. So these are currencies that has Great British pounds in them. Okay, so they are being paired with Great British pounds. Okay, so let's go to the next one. So we have other crosses, that they are not the part of the popular ones. They are not part of the euro, JPY, or or GBP. So we have AUD CHF, AUD CAD, AUD NZD, CAD CHF, and all that. So these are examples of what other crosses. Okay, so let's talk about the last one, which is the exotic currency pair. Now, exotic currency pairs are made up of one major currency paired with currency of an emerging economy. So we will pair one major currency with the currency of an emerging economy such as Brazil, Mexico, Chile, Turkey, South Africa, or Hungary, etc. They are called what? Exotic currency pairs. So these pairs are not as heavily traded as major or crosses. So the reaction costs are associated with trading. These pairs are usually bigger. So examples of them, we have USD BRL, we have USD HKD, we have USD SAR. So these are examples of what major exotic currency pair. So when you pair a currency, major currency with the currency of an emerging economy, it is called an exotic currency pairs. Okay, now let's talk about most traded currencies in the world. So if you're talking about the most traded currency in the world, we have Euro USD to be the most traded currency in the world, which is 28%. So Euro USD is the most traded currency in the world, followed by USD JPY, followed by GBP USD, followed by AUD USD, USD CAD, USD CHF, Euro JPY, Euro GBP. So all these are examples of the what major currencies that we have in the world, and others. So other is 28%. So you can see that any of these currency pairs that are not among here, they are inside this other. So the 8 major currencies that have been traded in the world is Euro USD, they're followed by USD JPY. USD JPY, Euro USD, they are what? They are major currency pairs, okay? But Euro JPY and Euro GBP are not major currency pairs because they don't have US dollars. Okay, now after that, after being said and done, we've been able to identify tradable instruments in the market. Now, what do you need to start trading? What are the things we need to start trading? The first thing, because it's a virtual, it's a global financial market, is something that runs worldwide, and you can also trade it on your laptop. So the first thing you need is a personal computer, your notebook, your laptop, your phones, your mobile phone, that's your smartphones, that's that. Then the second thing, you need a stable and high-speed internet connection. So you need a stable and high-speed internet connection. The third one is in what you need your limited funds. Yes, you need money to start trading. You need money to start trading. Then the minimum we do here, and the minimum for deposit in our platform is $100, but $50, but the $100 is still very, very advisable. Then you also need reliable and trusted forex brokerage firm, which is us. So you have us here, so you don't need to worry about anything. Okay, so this is the first class that we have, and this is the concluded part of this module. I would like to welcome you, and I would like to say, give it more time to trade and to also have more opportunity to learn from the global financial market. Thank you very much, and have a wonderful day.